No one. Perfect. So good morning, everyone. I hope those of you that celebrate had a nice Easter. I know it was a little different than years past, as is everything else that we're doing these days, including this webinar. So thanks for being here. We have some great guests with some really fantastic information for you guys today. You'll also have the opportunity to ask questions. There's a chat open. And I believe there's a Q&A also, so you can type your questions in there and you can ask as we go along. And then at the end, before we finish up at noon, we'll have some time open for questions and answers also. In case it happens, Adam just mentioned, Adam is the moderator today, so he's running this webinar. If we lose power, I know a lot of people, the power has been going in and out. So if that happens, he's going to rejoin from his phone. So then we might have to just jump back on, but we will get it started again if it does cut out. So it's not over, just you might have to click that link again, so you know, to get the rest of the information.
Let's hope not, yeah.
Let's hope not, right, exactly. So let's keep the wind steady just for a little while. We're joined by Adam Heller, owner of Heller & Consultants Tax Grievance, and you guys, many of you I see have been on for the last 2 weeks before this also. So yes. We're doing this webinar every single Monday at 11 a.m. for you guys. So thanks, Adam, for this great idea and for organizing this. We also have Stephen Barnes, CPA to the stars here on Long Island, works with a lot of real estate agents, and he's going to be answering a lot of your questions about whether or not you apply for these government federal funding programs, the money that's available to business owners, and he'll share some information on how you can apply for those. JB Bolvadin has joined us again, 10X Success Solutions, and he also is the top Long Island real estate sales trainer, so you'll definitely want to hear from him. And we're joined again by Todd Sangiovanni from Finance of America Mortgage. Thanks for being here again, Todd. And he's going to update us on what's happening in, with the mortgage rates and how, he said they're still getting to the closing table, and I know that's really important to figure out how to get that done and as quickly and as seamlessly as possible, so he'll share information on that. So let's start today with JB. We'll bring you on first. So as I mentioned, JB, 10X Success Solutions. I know a lot of the top Long Island real estate agents, you're their go-to for everything they need to know to like up their sales game. So can you tell us, what are some of the things that the agents can do to help, keep their businesses going in this time, what they're allowed to do, some maybe good ideas. I'll let you take it.
Yeah, absolutely. Thank you, Michelle. So thanks for having me again, everyone. Hello, my name is JB Bolvadin. If you don't know who I am, that's my fault, so I apologize for that. So basically what I do is I train real estate agents and real estate brokerages and sales companies in general, sales performance training. We're talking about from the small mom and pops to the really large multi-state and international companies. And I can tell you from experience right now, what's happening is that we've been implementing a lot of things that's been effective and working as we get through this process. So some things to keep in mind is we just saw an announcement yesterday that JP Morgan is changing their lending guidelines. And one thing to realize in real estate is the real estate market is dictated by the financial markets, because if banks can't lend money, most people won't be able to buy a house anymore. And it's very interesting to understand this, because as business people, we need to understand the difference between middle class and poor. And if you had to guess, I know people really can't necessarily reply back right now, but you just took 10 seconds to guess what's the difference between middle class and poor, what would you guess?
We got two. Yeah, we have two people raised their hand. All right.
All right.
Okay.
So, can we see what they're saying, or can they chat it in?
Chat? They can enter, guys, enter your guess in the chat if you can. Let's see.
All right, let's see. We got.
Okay. Yeah, do you see it there, Glenn?
He says middle.
I see that. Yeah. So,
yep. Go ahead.
Go ahead.
Glenn says middle class has a job. Poor lost their job.
Great guess, Glenn, and I think that could be semi-accurate, but let me even break it down from a bigger perspective. The difference between middle class and poor is that middle class people can get credit, poor people can't.
Okay.
Because think about it, if you couldn't finance your car, if you couldn't finance your house, if you couldn't put stuff on a credit card, what would your buying capacity really be? What would the standard of living really be? So that's really the biggest difference between the two. And what we're seeing is that the ability to get credit starts to change what middle class is. Like, for example, if I had 3.5% down and a 640 credit score, and now I'm not allowed to do that anymore, that might actually move me out of a class rate because now I can't actually get the things that middle class would get me. So why is this important to realize in real estate? Because people that you're talking to that are qualified now may not be qualified in the future. Now, I'm not going to jump the gun because there's good news, because Todd can still do a lot of things that other banks can't. So there is light at the end of the tunnel here. But I just wanted you to look at some things that you can consider as this thing starts to change and scale. So a few things to realize is that what you need to do is you need to go on MLS and you need to start looking at properties in town. So the best way to identify what I'm about to say is this. So if you go to Newsday and you look at what school districts are rated the top school districts in Suffolk and Nassau County, you're going to see a pattern in those school districts when you start to look at public record. You will see that a majority of the people buying homes in those areas are putting anywhere from 20, 30 to 50% down. All of them would be tier 1 credit as well, which it means that these changes mean nothing to those buyers because that's the way they do business anyway. However, if you look at another town, maybe like Central Islip, maybe Patchogue, these towns are more middle class, but you'll see there's a lot bigger loan to value ratio of 90, 95%, 96%. And what you want to understand is that a lot of buyers you have maybe 6 months from now may not be able to be buyers. So you want to make sure that you're actually prospecting and looking in areas where the average transaction has low loan to value ratios, because all of these changes will not affect that tier of clientele. I hope this makes sense, because what you're going to see is you're going to see the definition of middle class as per buyers and sellers change as regulations change, because access to credit is what really creates access to class. So what we want to make sure is we're adjusting that accordingly in real estate. That doesn't mean that if you have deals in other areas, turn them down, don't. It's still a good opportunity, but it means that time on the market and what a qualified buyer was defined as may not be that definition anymore. So make sure that you're building out infrastructure where as these changes start to happen, it's not necessarily a change for other people. And that's very, very important to realize. In addition to that, you need to start understanding your ratios and start reaching out to people, which is very simple. If you're taking notes, write this down. It's called 20, 50, 30. I'll say it again, 20, 50, 30. So 20 represents this. 20% of all the people that you're going to come in contact, if you're actually prospecting efficiently, are probable deals. Most likely they will transact with you. 50% are possible deals, and that means that you're going to actually have to sell them on working with you, whether that be following up or handling objections or long-term approaches. And finally, the 30% are people that you should stay away from in your business life and personal life. They need to be quarantined. They should have been quarantined a long time ago. The reason why these prospects are more antagonistic, they tend not to be realistic, argumentative, and you really can't get far. Because speed is the new big in this business. So getting big is not important. It's how fast you can move. Speed is the new big. So you need to start reaching out to people, targeting communities where these changes in the financial industries won't affect those particular markets, and understand your ratios and not, determine your success on a single interaction. Really, I got good news and bad news. I'll give you the good news first. The good news is the chances of you becoming a millionaire in the next 18 months in real estate is significantly higher than it was last year. Bad news is there is no average real estate agent after this. You're going to get blown out because it's only going to be feast or famine. So you have to start understanding these trends now and then moving accordingly, because if you're not doing that, you'll have a problem.
Right. I mean, I like what you said about the speed is the new big, because and everyone, like Todd will be able to talk about like getting to the closing table and stuff. If you can't get something done fast, someone else is going to do it. It seems like there are people that are getting things done. And so it seems like it's really important for agents to be, do some due diligence and really find out how they can still do business. Because I know, when this all first started happening and when, business was basically first shut down, where they were told agents, you can't do anything, and you can't even be the reason someone does something. It seemed like a lot of people were just like, I can't do anything. And they were afraid. Obviously, it would make sense to be very cautious, but people are getting stuff done still. I've had agents calling me saying, I'm closing on 2 properties in the next 2 weeks. So I know that it's still happening. So this is the chance, I guess, to just make sure that you're up to speed, that you know what's happening. And that's why I'm happy to be able to have, you guys on today. And I appreciate you joining. This way, a lot of the agents that are on today are people that I work with all the time. And I know that they're all anxious. They want to be back to work. They want to get these things done. So Hey, JB, how do you identify that 30% that you want to quarantine and stay away from? Like, are there any like tells?
That's a good question. So what you want to look for is, this is going to come from experience, but I can give you some basic stuff. So the 30%, the ones you want to stay away from, are people that are extremely unrealistic, extremely argumentative, antagonistic, or also very, very, very easy to get in contact with, because that's setting you up either. Just so you guys know, the easier the appointment, the harder the close. Because time is money. So the ones that say yes to everything, are you available at 10? Yeah, sure. Oh man, I'm sorry, 10 o'clock tomorrow. Yeah, that works. Then you're on the phone with them, or you're on a webinar with them, and they'll spend the entire time talking to you. And these are bad indicators, actually. And you start to learn from experience how that actually works. But those 30% burn out a lot of real estate agents.
Okay, interesting. Yeah, I like that availability thing is, pretty interesting. They're just like yes men, just saying yes to everything, and then you actually try to make something happen and it goes nowhere. So I know people like that. That's good advice for me too, even though I'm not a real estate agent. So that probably applies to a lot of things in life. So
absolutely,
thanks for that. Yeah. So let's see. Adam, do we want to bring Todd on? Because I know we were talking a little bit about, JB had mentioned about.
I did have a quick question for JB though, real quick, before we get to Todd.
Yeah.
JB, I know you're in touch with a ton of Long Island real estate agents. How is it going? Are the virtual showings working, in your opinion? Are there any improvements, any realtors that you've spoken to that have found ways to improve on the virtual showings? Or
great question. So the virtual showings are working. It's become a standard norm at this point. So a lot of buyers are very open to it. You do have contingencies now in deals where they want access to the house before actually closing one time, and then some people are closing with escrow because they can't necessarily get a thorough inspection that they would like. So they're closing with some money in escrow to hold over. But it is appeared to be working and working efficiently. The real estate agents like it more because it allows them more autonomy. They're going to vacant houses and streaming it to the client. And it's also becoming easier because it's a lot more efficient to bring in decision makers. Because as we know, a lot of people, when they buy real estate, they also want to know what their mother-in-law thinks, or what their brother thinks, or what their uncle thinks.
Sure.
So we're able to get all the decision makers available now because everyone has to be home, and get them on virtually, which makes it even easier. So the time from looking at a property to making an offer has been reduced significantly, and going into contract has been reduced significantly. So it's very efficient. It's actually easier to sell a house now than it was, especially for the people that are embracing it. But a lot of people still aren't embracing it yet, and I think that's what's creating the delay and kind of like the hold up in the market overall.
Okay.
Yeah.
So a little bit of good news there.
Yeah, I've heard some of that too. We had last week when we spoke to a real estate attorney, he was just saying it seems like it's people that are embracing it, like you said, JB, going a lot smoother and a lot quicker when you're just like, FedExing documents instead of trying to bring everyone together at the same time. Like you just said, with all the decision makers, it's easier now. A lot of people feel that there's a lot of things that we're doing now that will, even when this, pandemic is over, that will continue to stay as part of doing normal business. So I would certainly encourage everyone to try to embrace this new way of doing business as much as they possibly can, because I feel like it seems to me that professionals that are involved in it are saying it seems there's a lot of aspects of it that are a lot smoother and a lot faster. So people that aren't on board yet probably need to do what they can to, like you said, embrace this, some of these changes here.
Absolutely.
Yeah.
Yeah, you can't, we've been saying it, I think, every week, but I think it bears repeating. If you're trying to do business the old way, it's not working anymore. Unfortunately, in this day and age where we're living right now, in this crisis that we're going through, you need to find new ways to conduct your business. Otherwise, you won't be doing any business.
Right.
You have to. You can't just sit
That's
on
right.
your feet.
Yeah. I totally agree, Adam. You're going to either have to, the basically inefficiency in itself is expecting your environment to adapt to you. and efficiency is adapting to your environment. And a lot of people, I think, are trying to operate inefficiently right now. And the stubbornness won't win them an argument. And stubbornness may win them an argument with their kids or with their wife, but it won't win with the economy.
Right.
So you're going to have to get real fast.
Right.
Yeah,
Right.
that's good advice. JB's got these great one-liners. I love it.
JB's awesome. That's what makes him
Speed is
the
a new
best.
thing is my favorite. That's
Right.
great.
Thank you.
Yeah, thank you. Todd. So Todd San Giovanni, Finance of America Mortgage. I know you guys are still, have some great things that you're doing for your clients. I know you're still getting to the closing table. You want to give us some tips, some advice, tell us what's happening with mortgage rates and all that good stuff.
Absolutely. Well, it's always a favorite topic. Actually, Adam was the first thing you said to me, where are interest rates right now and what they've been doing. Last week, the average was 3.33 according to the Freddie Mac chief economist for the entire week, which is definitely better than it was last month.
That's good news.
Okay, yeah, that's a good rate still. So Todd, do you still see people, aside from even people that are taking loans to purchase new homes, are people refinancing right now? I know it's probably people other things on their mind, but it seems like it wouldn't be a bad idea for a lot of people with that interest rate.
Definitely. Whether you locked in at a higher interest rate and want to reduce your payment, or if you want to do consolidation right now, some of the guidelines have certainly got more stringent than they were in the past. So it's important to communicate with the bank that you're working with and know what's going on and how the guidelines have changed, particularly for self-employed people. A lot of things have changed.
Yeah, JB mentioned that there were some lending guidelines changed for JP Morgan this week. I heard that also. They were looking at like 740 credit score or something like that now, and they had like
when I read
really
700
stringent.
FICO score, yeah,
Okay,
20% down. Otherwise, they weren't taking it.
Wow.
And one of my colleagues mentioned that Wells Fargo was doing something pretty similar. That if you didn't have $250,000 worth of assets, and again, I haven't verified this, but it's somebody that I work with, and I trust them in business for a long time.
Okay.
And that they weren't lending.
Todd, can I just jump in real quick? I have a question.
Yeah.
For realtors out there with buyers that are first-time home buyers, and the home buyers are planning on doing an FHA loan, which typically is 3.5% down. Is that right, Todd?
Correct.
Okay. Have there been any major changes to those loans?
Not the down payment, but the FICO score requirements. Late last week, they did announce some tightening, and I wouldn't be surprised if we heard more changes towards the middle or end of the week.
Okay.
So what is the FICO score? Do you know what the minimum FICO score is for an FHA currently? And what was it?
Last week, we discussed overlays. So what the guidelines for the program are one thing, and then a lot of banks have adapted overlays, which are rules that supersede theirs to mitigate risk. So it's going to be a little bit different for every lender. For like us right now, we're at 620. It used to be 580. A lot of lenders that I'm talking to that they're in the business are looking at 640.
And so the down payment for an FHA is not different, but what about, do they need to have more money in the bank to have, I guess, more of a cushion, if you will, for future payments? Do they need to have more money in the bank? Like, do they need to show that they have 6 months of mortgage, property tax, insurance payments in the bank or anything like that? Or has that been unchanged?
Not for FHA, but for self-employed people, I was starting to allude to that earlier. A lot of banks have adopted a policy where they'll require reserves of 6 months for someone that's self-employed, meaning the mortgage payment itself, and they'll use 75% of their income. And if you have 12 months, they'll use 100% of it. And the reason being is you're self-employed, and most of you guys are real estate agents. You have a pipeline a lot of stuff that you're closing now or classes in the past couple of weeks is stuff from the stuff that you worked on 2 and 3 months ago that have been part of your pipeline. Trying to project going forward, someone that's self-employed, that business model is going to look a lot different, because of the economy that we're in.
All right.
Right.
Well, that's why we
Todd,
want to
so-
hear from Steve. Yeah, go ahead,
Yeah,
Michelle.
I want to ask another question to Todd too. I don't know if you can answer this, Todd, and I don't know if this is on a case-by-case basis, but let's say an agent has been working with a potential home buyer and maybe they just started the process of getting them pre-approved. What happens when, what happens if that home buyer or that potential buyer was suddenly like furloughed? Should they hurry up and try to get an approval based on like the last 60 days pay stubs, or now are they kind of stuck and do they need to wait? Like, would that pre-approval change if they don't close on a property in a short period of time? Like, what would the advice be for that person, to just wait it out until they're back to work for another, 2 months, 3 months, or hurry up and get it done if they can before this whole, their unemployment status changes?
Well, I would discourage anyone that was at risk to apply for a loan right now. It's a pretty dangerous situation. A lot of banks are having paperwork to protect themselves against somebody doing a forbearance as soon as they close, because banks don't want to get stuck with a bad loan. So if you have the knowledge of that you're going to get laid off or face a potential hardship, it's going to be an uncomfortable situation. And what the ramifications are, I haven't read the paperwork on that yet, because a lot of this paperwork is very new in the past week. So I haven't had a chance to review it myself to speak intelligently what's on there and what the repercussions are. But I know we've done a lot to try to mitigate risk so we could stay in business.
Right.
And still help our clients out in another year from now.
Right. Glenn Hagan asked a question, Todd. He said, when and why did the lending guidelines change, and was it only the secondary market?
Well, it's a twofold question. So banks have tightened down guidelines because of the market conditions being what they are, and people people that are employed, we don't know what it's going to look like and how long this is going to take to get past this. If we had, like, say, the end of this month and we would get back to normal and people will go back to work, even if that did happen, people wouldn't be able to go full force. It would take a while to get to where we were, because almost every business, if you're non-essential, is stop working.
Okay. Here's another question from Kimberly Vecchio. A refi or new purchase cannot be submitted with a forbearance request in play. Is that correct?
Yes.
I would imagine. Yeah. Okay. Thank you. Thanks for that, Todd. Obviously it's a very unusual situation that everyone's dealing with right now, and it's with the lending programs, Todd. So if anyone has questions on loans, obviously I know you said you guys are still getting to the closing table, so people can always reach out. They can ask you any questions that they have. I know you've always been very helpful to a lot of the agents, and so there's still programs and people are still getting loans, right? So,
we are. It's important to communicate though with the loan officer and or the bank that you're working with, so you know what's going on, what changes have happened. Anyone that has a pre-approval that's 3 weeks or more, older, I should say, those should be reevaluated and have conversations before you invest your time and resources into helping them find a home. Make sure that their job stability is good, and the likelihood of them keeping it is, it's really difficult for somebody to say, yeah, I have 100% certainty of keeping my job. But if they have the knowledge of this ahead of time, like, wow, I could be laid off, this goes off another month.
Right. Okay.
Teachers, firemen, cops, right?
Yeah.
I'm sorry?
Teachers, firemen, and cops.
Yeah, those are safe.
Yeah, pretty much anyone that's essential.
And I would say medical workers, they're pretty much,
They're working pretty hard right now.
Yeah, they sure are. And we thank them for that. Todd, Glenn Hagan's asking, what does your closing table look like? I know we had, we spoke to a real estate attorney the other day, and he was saying that his office luckily has multiple conference rooms, and they were able to put like the buyers in one, the sellers in another, and like keep everybody totally separate. So I also know obviously a lot of documents are being exchanged via FedEx and overnight and things like that, with notaries, involved, obviously more so than usual. So what does your closing table look like?
That's a great question. As of last week, we implemented virtual closings. Only 6 documents need to be wet signed.
Okay.
And by June 1st, we expect to be 100% virtual.
What does wet signed mean for those people that don't know?
Well, wet signature is a hand signature that require, and it's going to require to be notarized. So it's the mortgage and the note pretty much that need to be done right now. We were working on a system to do this before this even happened, the pandemic, and we were able to roll this out much more quickly than most banks. And we haven't got through that process yet. Particularly New York State is an unusual, where we're an attorney state, and most other states are not.
Okay. Right.
Also, I mentioned last week for anyone that's on this call that we implemented something to help people out during this hard time. Is the bank, my bank, Finance of America, is going to pay for their appraisal. In other words, we're going to give a closing credit for the appraisal and a $500 lender credit for any new applicants. And if you have something out there and you want my feedback to look at it, and there's no obligation on their part to apply with me, I'm happy to look at it and give you an opinion and let you know what I think of it, and just so you guys aren't wasting your time and know the right questions to ask.
Okay. We did have, and now someone else is asking how our appraisals being handled. I know we had, that's Teresa. Thanks, Teresa. We had appraisals. I mean, it seems, I don't know if you guys know the exact answer to this. It seems like they are still getting them done somehow, like with just, they've loosened some of the regulations, people obviously doing drive-bys, but then, you know what's been happening to JB? Does anyone know what's been happening with appraisals and how they're getting those done?
Well, anyone's putting 15% down or more, or 85 loan to value, we'll do a drive-by and a desktop review on the appraisals. And anything that's less than that, they're putting 14% down or less.
Okay.
We have to do a physical inspection of the property, and they're taking the proper measures by wearing their masks and gloves and the foot covering, and try to work around people that are in the house. Either they step outside, right, or they stay in a separate room and work around. So they practice social distancing.
Okay. Yeah, do either of you know, JB, you might know this too, because I know we talked about this once before. They seem to keep changing some of the regulations as like who's allowed in a home, who's not allowed in a home. I know at the beginning it was no one's allowed. The real estate agent can't be the reason that any buyers and sellers meet, that anyone goes and does obviously no open house or anything like that. Then that seemed to loosen the regulations just a little bit, where it was, if you were taking proper precautions, you were able to go in. But a lot of agents have asked me questions about, can a photographer go in and look if they're taking precautions and the seller agrees. We've heard some real estate agencies are using like hold harmless agreements and things like that. Have you guys heard any updates? Is there any changes to those regulations for agents now as far as who can go in a house and not? Do either of you know that?
Yeah, so I think the hold harmless agreements are very smart to do, because people can't come back at you and say, you did something wrong, because I think everyone's working in good faith. Nothing's a guarantee, but everyone's taking the best precautions they can.
Right.
As far as a photographer being able to access, like if you hire a construction company and they're considered essential, the supplier that brings them cement would also be essential then, even though they're not going to be doing construction. So the photographer is a vital part of the business. So I don't necessarily see a technicality going on over there.
Okay.
So here's the reality. I mean, I think the biggest thing to keep in mind as a real estate agent is before there's a lot of crises going on. They were talking about needing 140,000 extra hospital beds, 40,000 ventilators, converting Jacob Javits Center to a hospital, converting Stony Brook University, in addition to the hospital that they have, the campus to a hospital. So I don't really think that there's a task force right now trying to analyze if a real estate agent's hiring a photographer or not. And I think some real estate agents are looking for too much validation. And this is the way I look at it. And I said this on a coaching call right before this one. If it's not illegal or unethical, do it. Because by the time they give you the new rule book, it'll be a year from now and the damage will be done. So hold harmless agreement is smart. If you're bringing a photographer, if you're a videographer in, make sure that they have a mask on and gloves, and obviously they haven't been in contact with people who are sick. They take every precaution possible. But that's probably the best way to go about it, because we need those things to function in our business. We can't just write descriptions and expect someone to shop virtually without a virtual component, which is what the photographer is going to deliver. So as of right now, I haven't seen any issues with that. I haven't seen any reports of that. The good news is that, you know, if you guys don't mind me sharing my opinion on something, the good news is for realtors is that if you notice, as soon as they talked about the expanded unemployment benefits, within 24 hours, realtors became essential, because at that point they'd have 28,000 people guaranteed signing up for it. So it kind of, anything that they don't have to pay us, they're happy to let us work. And I mean that in like a nice way, not in like a difficult way. So for real estate out there, if you're practicing the smart way of doing things, safe way of doing things, and you have hold harmless agreements, I think you're as safe as you're going to get in this. I really do. You know, aside from us eradicating the virus, which is not our department, we're doing everything we can to make sure everything is being done the right way.
Right. Great.
I think appraisers right now and home inspectors / engineers are on the list of essential. And if they're not on the list, somebody that wants to inspect the house or somebody that's vital to the real estate industry, there's a process, correct me if I'm wrong, JB, to be on the essential list, like an application of sorts. Is that correct?
That's right. That's right. But also, you know, we're trying to determine who's actually overseeing this list. So I think it becomes like once you're connected to something essential, you're essential, you know, like, so it's anything that feeds something that's essential becomes essential anyway. But yeah, there are people being added to that list, but it's hard to actually find out who's approving the list. I feel like it's more of the way this is being enforced, it's becoming more of something in good faith than actual like if the police pulled you over and like where you're going and you said, I'm an essential employee, how, you know, they're depending on the person being honest versus the cop has no one to call to verify your essentialness. So I don't know if essential, I guess essentialness is a word, and if not, I made it up, so whatever. So, but it kind of comes down to that. I think if everyone just plays it safe, it works better that way.
Right. Like, you know, we still haven't lost our common sense, let's hope, right? So as long as people are doing things safely and ethically, what you said makes perfect sense to me. And obviously people, if you can work, you know, like find a way to get it done, like we said, safely and ethically. And speaking of, so who's essential, who's, you know, who can collect unemployment, all those things. I'm really glad that we were able to have Steve Barnes on. I know it's an exceptionally busy time of the year for you anyway, Steve. So thanks for being here. Steve's a CPA, and he's going to, I know I've got so many questions from agents about this, and it's just been at the top of everyone's mind, and a lot of conversations about a lot of the government programs that are available now, the economic disaster relief, the PPP program. And from what I've heard, you know, if you're self-employed, you might qualify for some of these programs. So Steve, can you shed some light on these programs for the agents that are listening today?
Sure. So there are basically 3 programs that are out there. The first is the stimulus checks that for $1,200, which everyone is going to get, regardless of whether you're self-employed or not, and $500 per child. So if your income for a single person is under $75,000, or you're under $150 for somebody who's married, you will be getting your stimulus check. If you have not filed your 19 return, they will work off of your 18 return. If you haven't filed 18 or 19, then the credit gets taken on your 2020 tax return. Oh. So it won't get lost. It just may get moved if you're a little behind on your filing.
Okay.
So that's gonna be program number 1. And that really doesn't have anything to do with the self-employed per se. It's just we do get a lot of questions on it.
Yeah.
The second is the SBA.gov loan, the economic loss loan, which the application can be found on sba.gov, and pretty much you start by applying for $10,000 of free money, or a grant, I should say. And if you, depending on where it goes from there, we haven't seen anybody yet, but supposedly they're supposed to come back with a loan amount that they're willing to give you. The $10,000 would be a grant, but anything above and beyond that would be a true loan that would have to be paid back at 3.75%. So that is sort of program number 2. And anybody who has a business should apply for that. The only catch is that you need a business bank account in order to apply. I'm sorry, that's for the PPP. So if you are, I get them backwards sometimes. So with the SBA.gov, you're just going to apply for the $10,000, and then they'll come back to you if they feel that based on the numbers you've provided to them, which is your gross sales and your cost of goods sold. Once you, and realtors probably don't have a cost of goods sold because you're not selling anything, you're providing a service. So you would take your gross sales, and then SBA, the Small Business Administration, will come back to you with a loan depending on how you fill out the application.
So so that 10,000 is the 10,000 though, Steve, that's a grant. So that is anything above that they can decide to give you more than that initial 10,000, and that would be the loan amount.
That's correct.
Okay.
So we haven't seen, because it's only been around for a week. No one's gotten to the point yet of getting a loan offer.
Okay.
So we're waiting to see how that works out.
Yeah.
There was some articles in the trade journals this morning that the banks and the Small Business Administration are extremely overwhelmed.
Really?
So it is going to take considerably longer to process than was originally anticipated. I think the issue is they did not expect as many people as did apply for it. So,
well, I also heard that once this $2 trillion or whatever they've allotted to these different loans, that once they run out, like that's it from what I understand. So then I think that's also what made everyone, like, they just flooded them with applications because they said once the money's gone, then you're out of luck.
Correct. And some banks have already run out of money and they've reapplied to the government for extra money. But it is right now unknown as to whether or not that extra money is going to come through or not.
Wow. Yeah.
So
we've
gotten no clarity.
Yeah, and I've seen a lot of banks were saying that even though they're allowed to lend to any business owner, that they are saying we're only dealing with our current customers, and if you don't have a business banking account with us, then we're not going to even work on your application at all. I've seen that quite a bit too. Yeah,
that is correct. That they want you to be a business.
Yeah.
Is really what it comes down to. They do not want, if you're selling Avon, you're not really qualified for what they're trying to accomplish.
Right.
They're trying to accomplish getting money into the hands of people so that they can continue their business. So that is effectively program 2.
Right. Okay. So then I can ask my question, but you might answer it with program 3. So I'll let you continue.
Oh. Okay. So program 3 is the PPP, which is the Payroll Protection Program. And for those who have employees, let's start with them. Those that have employees can apply for, you take your average monthly payroll and you multiply that times 2.5, and that is the amount of the loan that they are supposed to give you so that you can carry on your payroll for 8 weeks, that you don't let anybody go.
Right. So now it'll basically keep those people off filing unemployment, and they're giving the businesses the money to pay them so that they remain on the payroll and not filing for unemployment benefits.
That's correct. So what they don't want is, ideally what they don't want is for everybody to claim unemployment. They want you to get this payroll protection and keep your employees on the books.
Right.
Combination of two reasons. Number one, if they're on the books, they'll keep spending money and, paying their bills on the economy.
Mm-hmm.
And then the second is, part of it is forgivable. So
Right.
if you use the money and 75% of it is for payroll, and then 25% of it are other things that are allowable, such as your rent, your health insurance, your utilities, interest on any loans that you have. So as long as 25% is used for that, the entire PPP is forgiven.
Okay.
So we do have a large loan that may be forgiven if you have the employees on the books. And, hopefully they're working. If they're not working and you're paying them from the loan, at least they're paying their bills, which keeps the economy from falling apart.
Right. And it also keeps the unemployment rate down a little bit, like it probably helps that a little bit too. Just keeping the unemployment rates down looks, obviously it's still crazy high. So out of those, so obviously everyone's getting the stimulus check. Out of those other two programs, Steve, it seems like for realtors, the way that they conduct their business typically, it sounds like for obviously unless you own a real estate agency, most individual realtors that are working for themselves can and should probably be applying for that first $10,000 loan. Is that correct?
That's correct. That's correct. Because the problem with the PPP is that you need payroll.
Okay.
But now, as of Friday, self-employed with profit can put those profits down as
that's something, because agents, technically you pay yourself, right? They're making money as that's their income. Okay.
Correct. And so they're using that 1099 amount, or they're using that self-employed amount as the dollar amount for the PPP.
So take your
but
average.
You have to have a business bank account.
Okay, so you have to have a business bank account, and you can't get both. Is that correct? You can't get the economic disaster relief, that $10,000, and the PPP. You can just get one.
You are not supposed to.
Okay. You're not supposed to. Okay. And then so let's just say, okay, so if you're deciding which one you should apply for, I mean, it sounds like from what I've heard, I don't know if this is true, and I haven't seen anybody get this $10,000 yet, that might be the fastest one, especially because the banks going through your bank is so overloaded and delayed that it might take quite a bit longer. But also maybe it's to think you have to take the 2.5 times your income for the PPP loan. So what's the difference? Maybe the 10,000 is just quicker. It's almost more immediate relief than trying to get a PPP loan that potentially won't need to be paid back, going through the bank process, which again seems like the banks are like, hold on, like we got your information, but we'll get back to you sometime in the next couple of weeks, it sounds like is what they're saying.
Yeah, the banks are overloaded, just like the SBA is. The real problem is, so how the PPP is special is because if you use it for the payroll and for the occupancy costs, as well as some of the other expenses, the whole loan is forgiven. The problem with realtors right now is that many of them don't have any income coming in for various reasons having to do with, market conditions. And so they're going to get to the end of the loan and have no profits or salary to speak of, and then they will have to pay that loan back.
Oh, yes, because they're not using it right. Okay. But it seems like maybe unless they're using it to pay themselves, because the loan's going to be 2.5 times their monthly income. I know it's probably harder. That seems like a challenge for me, that loan for real estate agents. It definitely seems to me that 10,000 is going to be the quickest, easiest thing for them to apply for and get some, relief. Yeah. And they can do that right on the SBA.gov.
Right. And you may get a loan with it. So what you're really doing is you're not applying for $10,000 of free money. You're applying for the SBA to come back and give you a loan.
Right. And they might just give you the
Now-
10, or they might give you the 10 in a loan.
Correct. And you don't have to take the loan. You know, if you find that you're an essential employee and that your revenues are kind of doing okay, maybe they're just off by 20 or 30%, you may decide that you don't want a loan that you have to pay back.
Okay. Yeah. I heard, and I don't know if this is correct. Obviously, I'm trying to read as much as I can about this also. I heard that so I didn't know that the $10,000 was a grant or just, you know, free money. I thought that was, I heard that they're not being paid back. I heard like a 1% interest rate for the PPP and that disaster relief. So that's not the case. It's a $10,000 grant.
Correct. The 10,000 is a grant. The loan is at 3.375%.
Okay.
It's
All right. I did
for
hear
the
you say that.
SBA.gov. So that's 3.75.
Okay.
The PPP loan is 1%.
Okay. That's the 1%. Okay. God, thank
That's
you for
the
that clarity.
1% is correct.
Okay.
Right.
All right. Good. I know it's you know, everyone's scrambling and it's been like really confusing. Like I said, you're hearing bits of information. So I appreciate your expertise on that. So I did also look at that SBA.gov, and it seemed like they had said to complete the form is like a 2-hour process. And it was like, looking at the form, it looks like pretty basic. I mean, like you said, they're asking for your gross income, your cost of goods sold. So what about for a real estate agent, say they're doing this themselves, they have a cost of doing business, you know, whether it's their marketing, things like that. Is that part of it's not, it's items, so they wouldn't have a cost of goods sold? Okay.
Now, realtors won't have a cost of goods sold because they're not selling anything.
A physical item.
I mean, they're selling houses, but
right.
you know, but they're not selling widgets or pencils or something where you would have a cost of goods sold.
Okay.
So their advertising office, auto expense, LIBOR dues, etc., are expenses that will result in their bottom line, but
Okay.
it does not count towards these, you know, the PPP loan.
Okay.
I'm sorry, the SBA.gov.
At the SBA, right. Okay, yeah, I know. Jeez, gosh. Okay, good. Yeah, thanks for that.
Steve, what's the bottom line for me? If I'm a real estate agent sitting at home right now, I'm watching this webinar, what is the first thing I need to do to try to get some government relief? Where do I go? Do I go to my bank? Do I go to my accountant? Do I call you, Steve Barnes, CPA to the Realtor Stars? What do I do?
So it seems to be about 50-50. So about half of our clients are doing it themselves because the form itself really is kind of straightforward, with the exception of the question that asks for your annual sales and your cost of goods sold. Those are the only numbers on the form. So we have been filling them out for clients, and then some clients have just either looked at their tax return or their 1099 or whatever the case is, and that's where they're getting their revenues from. So some people are doing it on their own, and some people we're doing.
But if I'm a real estate agent, I was getting paid on a 1099. I should then, you're saying that I should contact my accountant.
Yes, because the bank is only for the PPP loan.
Okay.
So the 10,000 is SBA.gov.
Okay. Yeah, that PPP loan, I think most people are able to get if someone is paying employees, whoever uses a payroll company. I think the payroll companies can easily give them that information. It's, you know, what they've made in payroll.
Yeah.
Yeah. So
right.
that seems like the best contact for that PPP loan. Yeah.
Right. We're going to, and after the webinar, we're going to shoot out a recording to everybody, along with contact information for Steve. If you have any questions for him directly, I'm
if
sure
you haven't filed your taxes yet, because you have until July now.
Yes, you have until July 15th to file your taxes.
Yeah, that's great. That's good news.
But that helps a lot of realtors out.
But
that helps a lot of realtors out because I think most realtors are on a 1099. And so they're not getting a tax refund check like many employees do. So to be able to postpone paying those taxes,
Yeah.
that's got to be it's got to be a little bit of a relief, for
Yeah.
Especially right
And
now.
that was part of the, that was part of the reason for the whole July 15th, is because they figured right now is not a good cash flow time for a lot of people who might owe. So I've got a stack of refunds sitting on my desk, but returns that have refunds, but I don't have very many that have balance dues.
Right.
Those people have called and said, I'll see you in June.
Right. We're not going to do it July 14th. We're like, I need to file.
Yeah, that's pretty much what it's going to come down to.
Well, there goes your summer now. You usually have the summer is like a little slower now. There goes your summer. Sorry, Steve.
Yeah, it's okay.
Yeah.
An extra 3 months. What's an extra 3 months?
Right. Yeah.
Now,
so,
do you need gross receipts for unemployment? And the answer is no. If you are applying for unemployment, it's not gross receipts. It's net income that you would use for your basis for unemployment.
Okay.
So it's not gonna be the gross number. It's gonna be the net number for how much to get in unemployment.
got it. Okay. Good
Because
question.
it's based on your income. So your income is not necessarily your 1099. Your income is the net result.
Interesting.
Okay. Good question. So yeah, guys, we have the chat open for a few minutes. It does look like we have a Q&A here. Okay, so Tim McCaffrey's asking, for economic loss loan mention, you said that you're required to have a business bank account. If we don't have one, can we set that up now? Also, even though real estate agents are 1099 independent contractors, some are not incorporated, is that required?
So 2 questions. The first is, you can open a business bank account now, and that is for the PPP. Has to be a business bank account. You do not need to be an entity. You can be a sole proprietor, which means you have no entity.
Mm-hmm.
Right. So that's fine. That's not a problem.
Right. I was like researching quite a bit about this, and I did see some banks were like, you need to have an account with us prior to February 15th. So if I did see on SBA.gov, they will give you a list of banks that will provide these loans. If you are not a customer, you're probably gonna be on the bottom of their list. But I did see that there are some banks that will process the PPP loan if you don't have an account with them, but there are not too many of them. But I would say, do that sooner rather than later. And I did see that some said you can open a business bank account with us, but we're not going to do this loan for you unless you had that account prior to like a specific date. Like it seems to be like sometime in February. So
February 15th, correct.
Yeah. So Tim.
They want that set up by then.
Yeah. They just don't want to help new people.
Yeah, there are private banks that are out there that are lending that are not Chase or Citibank or Bank of America. I mean, household names, but there are private banks that were allocated funds, and as a result of those allocations, are accepting people into their programs who are normally not able to do it for one reason or another.
Right. And I did see that you could find that list. I did see it on SBA.gov. So that's a good resource.
Mm-hmm.
And then the second part of that question, Steve, was even though real estate agents are 1099, some are not incorporated. Is that required? So I think you answered that.
No, incorporation is not required. So you don't have to be a corporation or an LLC. You can be what's called a sole proprietor, and you're fine.
Okay. Here's another good question from Robert Larson. Is an IRA distribution considered part of your income that will affect your stimulus check threshold?
Yes, because it's based on adjusted gross income.
Yeah.
So that IRA distribution or pension income or whatever it is, in fact, any kind of income you have,
It's income.
is going to add up to your adjusted gross income, which is, when I say adjusted, it just basically means, the total amount of your income. If that number, if you're married, is above 150 or above 75,000 if you're single, then it starts phasing out the $1,200 starts phasing out over the next $50,000. So in other words, between $150 and $200 for married, you would get something, and then
But not the full amount.
but not the full amount. The same for single person. Between 75 and 100, they would. 75 and 99, you would get a partial.
Okay. Okay. So a question from Kathy. This sounds like a technicality here. If you're on unemployment and you have a closing, you file that you worked that week, even if you didn't attend the closing. I don't know. I mean, you didn't technically work,
I don't
right?
know.
I don't know either.
I mean, technically it's income, and thus you wouldn't, even though you're not at the closing, I would think that would be a week you would be unable to collect
income.
unemployment. Yeah, because you have earned income during that week.
Okay, yeah, that makes sense. Here's a question from Laura. As a realtor, do I apply for unemployment and the ELL? I think that means that $10,000, the economic disaster funds.
Yeah.
Oh yeah, both. Okay.
You can apply for both. You can apply for the SBA and you can apply for unemployment. And as long as you have, again, you're back to, as long as you have business profits that you can show them, because that's the basis for giving unemployment, is you have to have income.
Right.
So if you have the income, by all means, go for the unemployment.
Good. All right. Well, guys, these were great questions today. This information was terrific. Like Adam said, we're going to send you all a copy. Everyone that attended, you'll get a copy of the recording. We're going to send everyone's contact information. Steve, I'm sure if people have questions, they could reach out to you. And now, obviously, they can use you until July 15th to file tax returns.
Yeah, Steve, really, I've been in business for many years, and I've met and used professionally a slew of accountants, and I started using you, Steve. You started with my taxes a few years back, and you're just wonderful, man. Your office, your staff,
thank you.
Everybody is just terrific.
Really great.
If you have any questions for Steve, realtors out there, please, his contact information will be in the email this afternoon that you'll get with the recording.
Right. Yep. And same with Todd. If anyone has loan questions, mortgages, if you need to help someone, if you have questions, like we said, a lot of people are unsure what to do if they have, uncertainty with their employment. So certainly we'll include Todd's information so you can get to Todd. JB will have his information. Obviously, you heard he's still doing coaching calls, and they're doing coaching classes. They're just virtual now. And if you're looking for new ways to do business and even increase your sales, he said it's a lot easier now to actually, the agents that are working are going to wind up making more money than a lot of others because of this scenario. So JB can help you with that. We appreciate you guys being here. We'll be back again next Monday at 11 a.m. You'll be getting an invitation during the week for that webinar as well, so that you can register. Adam and myself, obviously, if you have any property tax grievance questions, the deadlines are coming up. April 30th in Nassau County. So if you have anyone that owns a Nassau County property, you want to check in on that really soon. There's a very short period of time left. May 15th in Suffolk County. So if you are still closing on properties, if you're having, buyers looking at properties, certainly call me and I'm happy to look at the property taxes. And obviously we want to find ways for people to keep more of their money in their pockets. So reach out to us anytime. And we appreciate you guys being here. So thanks so much. And we will see you next week. Thanks.
Stay safe out there, guys.
Thank you, guys.
Thank you.
Bye, everyone.
Thanks, Steve. Thanks, JB. Thanks, Todd.
Bye.
Thanks, Adam.
My pleasure.
Bye.